Good evening. Welcome to the webinar First Time Home Buyer. I would like to start with disclaimer. This information is made available to you as self-help tool for your independent use and are not intended to provide investment advice. I cannot and don't guarantee the applicability or accuracy regarding your individual circumstances. What I would like to say, basically, you will get all information required for your independent use, but I strongly recommend to use somebody who will help you through this process. You can see a question mark at the bottom of the page. The meaning of this question mark that I will do pause every time that you see this type of question mark so you can type your questions. Please don't hesitate to use a chat so you can type your questions. So I'm going to just text hi. So you should see hi in your chat window. So please don't hesitate to ask any questions that you may have. Okay, so who is a first-time home buyer? So if you never purchase a home, you're first-time home buyer, you are recently experienced a breakdown or marriage or common law partnership, you immediately become first-time home buyer. In the last 4 years, you did not occupy a home that you or your current spouse or common law partner owned, you first-time home buyer. So we will go through requirements. The first requirement is a down payment. A down payment is the amount of money that you put toward the purchase of your home. You need to put at least 5% down payment, and banks would like to see last 90 days. So what does it mean last 90 days? For example, if you're going to purchase something in February, or you want to start to go around and shopping around in February, banks would like to see January, December, November. November, December, January, you should provide statements from your bank account showing that you have enough money on your account, and no problem, you can purchase a property that you like. So as I said, 5% is minimum down payment for any properties under $500,000. If you buy something that's more expensive than $500,000, any amount that more than 500 should be 10%. For example, if you buy something for 600,000, 5% from 500,000 is $25,000, 10% from 100,000 on top is $10,000. So in total, you need $35,000 minimum if you are going to buy something for $600,000. Of course, if you're going to buy something more expensive, like million or more, you need to have 20% down payment. So here we have a question mark, so I'm quickly check a chat, and I don't see any messages on my chat. Again, if you have any questions, please don't hesitate to type them in. Mortgage default insurance. So if your down payment less than 20%, you need default insurance. You don't need to go and shop around for the default insurance. Canada has 3 insurance providers, and they provide the same insurance. So a differences between this insurance provider depends by your personal circumstances. So you don't need to worry. Your bank and your broker will work together and will find insurance that fit to your circumstances. If you have 20% down payment or more, you don't have to take mortgage insurance. But some banks may require mortgage insurance. It depends by your, again, depends what circumstances you have. So they may require insurance even if you have 20%. So here is an example. Let's say you purchase price of the home for $100,000. Your down payment just 5%, $200,000. So mortgage should be $380,000, but you need to purchase mortgage insurance. It will be added to your mortgage. So your total mortgage amount $395,200. And if you have questions, as you can see, I have a question mark here. So please ask them via chat. I don't see any questions here. So probably everything is good and you don't really everything clear. But just in case, if you want to ask any questions, please use a chat so we can have not just I will talk all the time. We will have kind of conversation. You will ask questions, I will answer on them. Yeah, okay. So please don't hesitate to ask questions. Okay, next. So next requirement is the credit profile. Everyone in Canada should have a credit profile. It meaning you will have a credit score and you will have a credit history. Credit history and credit score can be checked through TransUnion and Equifax, and you can directly ask to get from TransUnion or Equifax credit report. One report is for free. If you're doing like every year, you can get one report for free. If you need more than one report and you want to get them directly from Equifax to TransUnion, you will need to pay. So what's the way not to pay for these reports? You can get Equifax reports through Borrow for free, and you can see these reports almost every day and get requests for these reports almost every week for free. And Credit Karma providing credit reports through TransUnion. If you are using your bank, for example, Scotia or RBC, you may see credit score there and credit history there. These banks and other banks have internal credit scores, and also they are using TransUnion credit scores. So where should you look and check your credit scores? I strongly recommend to check credit scores through Equifax, because majority of banks in Canada using Equifax. Even if they use TransUnion, they like to compare between TransUnion and Equifax. So how you build good and strong credit? Make sure that you're using credit card. If you have two credit cards, even better. Make sure that you are not using more than 30% of the balance of your credit card. For example, if your credit card has a limit to $1,000, so don't use more than $600 during the months. You should pay all your bills on time, and please avoid to use cash. Don't put cash on your account. Don't withdraw cash from your account if you can. Now, sometimes I'm getting questions, okay, but I arrived to Canada. I brought some cash from outside of Canada. It's strongly recommend, if you just across the border, you need to put all your cash in any bank account as soon as you cross the border. So if you declared any amount of money on the border with Canada, please put this money on any account of any bank as soon as possible. Avoid using cash as much as you can. It helps to build strong report. It helps to get mortgage. Okay, and here is our goal. We want to buy a home. We are first-time home buyers. So try follow rules. So again, I'm put here, avoid using cash, all payments due on time, try to do it even before due dates. When you have 5% down payment and you new to Canada, you will be required to provide 12 months of rent and 12 months of other different bills such as phone or childcare expenses, or maybe insurance that you pay for your car monthly. So basically you should provide two documents. One document is 12 months of rent, and another document, for example, 12 months of paying for the phone. By the way, a lot of don't know, so it's not just for newcomers. Sometimes even Canadians that don't have developed credit, what do I mean by developed credit? Then they not really use credit card too much. Sometimes even Canadian citizens should provide this if they have 5% down payment. If you have 10% down payment, or for example, you have 5% down payment of your own and you use first time home buyer initiative and gets another 5%, so together you have 10% down payment, banks want to see 6 months of your checking account. So you don't need to provide rental documents, you don't need to provide any documents like phone bills or any other bills, just 6 months of your checking account, and it can be enough to provide a proof that you have a good credit. Sometimes non-permanent resident should provide a letter of reference from their financial institution, but is not really often, so it's just maybe can be required, but it's like not mandatory. Okay, I am back in my chat and I have a question. Which score is considered good for a mortgage? So today in Canada, 600 score, it's enough to get a mortgage. But enough is not good. Why? Because if we have a higher score, we can get a better mortgage. We can get a mortgage maybe with better privileges. We can get a mortgage with lower interest rate. So some banks say if you want to get lower rate, your score should be at least 680. Some banks say, oh, if you want to work with me, or you want to get a mortgage through my bank, your score should be at least 720. And sometimes for some promotional rates, score may be required even around 800. So as a standard rule or minimum requirement, 600 score is enough. And if you have higher, the higher is better. Okay, I'm double check if maybe any other questions here. Okay, I don't see any questions, so I just continue. So next is income, employment and income verification documentation. So if you have a job, you need to prove that you have a job. So the basic documents is usually employment letter, but in addition, other documents required. For example, if you have a fixed income, it means that you, for example, work somewhere and you have a minimum hours per week. Let's say every week you have 33 hours and you consistently work 33 hours every week, or sometimes you may work more, but minimum is 33 hours. Your employer can provide employment letter where it stays minimum 33 hours, and these hours will consider when you will get a mortgage. You should provide 2 pay stubs and letter from your employer. No, it's notice of assessment is from CRA. If you in paying taxes in Canada, after you pay taxes, every year you submit income declaration and you get notice of assessment from CRA, from Canada Revenue Agency, that says how much taxes you pay. It's kind of summary of the previous year. Right now we are at the end of January. In February, majority of us will start to prepare taxes. Around March, most Canadians already go in and start to fill out their declarations. So around April or May, you usually get your notice of assessment, where you will get all information about how much taxes you paid. So banks asking about this document as a proof that you pay taxes and you are not owing taxes to CRA. If your income change, you may be required other documents. Usually, if your income is changed, you're required to provide T4, T1 general notice, notice of assessment. So if your income change and you would like to take in account that sometimes you work not just 33 hours, sometimes you work 40 hours, sometimes you work 50 hours. If you want that bank will take this in account, you need to provide proof that this is happening not just in this month or this year. You should provide documents for 2 years. Let's say if I want to buy something in 2024, so I need to provide all documents from 2023 and all documents from 2022 to show that I am working overtime and other documents. Here is a list of documents for business owners. They're also required to provide 2 years of income verification. Sometimes I have cases when people have businesses outside of Canada and pay taxes outside of Canada. Unfortunately, we cannot use these incomes. But if you have a business outside of Canada and you pay taxes in Canada, you can use this income, and 2 years averages can be used to get your mortgage. Also, not just regular business like business owners that have very like sole proprietor is mean like person self-employed, but even incorporated corporation. If you open any like corporation, like big organization, you can also get a mortgage using income from this corporation. Also documents, list of documents right here, and if anyone needs, can contact me and I will explain how to use these documents. I don't want to stay too much and talk too much about these documents because not everyone is business owner. So if you have any question, please ask them via chat or just give me a call and we will discuss it. Any other incomes, for example, you divorced and you have separation agreement and you get regular deposits in your bank account. For example, like you divorce and your wife paying you some amount because she owing you something. You can use the income. It's called alimony, and you can use this income to get a mortgage. Many have children, and if your children usually under 15 years old, you can use Canada Child Benefit income that provided by Government of Canada as additional income, and you can get mortgage from this income. Maternity leave, for example, you are not working right now because just recently you gave a birth, so you're taking care of your child. But if you have employment letter that states exactly when you are going back to work, so some banks don't have a problem with this and they say, oh, we can actually use an income that does not exist now. It's like projected income. This is income that will be when you will return to job. So this is interesting facts that you can learn today and use if you have this case in like if it works for you. Every person who has income should pass a mortgage stress test. Mortgage stress test includes some formulas that I don't want to discuss here. Basically, what bank says, you need to pass and make sure that you can take a mortgage if your interest rate, like for example 5%, 5% plus 2, so you need to show banks that you can get a mortgage even if interest rate will be 7%. I hope in this year or maybe next year interest rate will go down, and for example if interest rate with a bank will be 3%, 3% plus 2 is 5%, so Bank of Canada says if it's under 5%, stress test will be 5.25. It means that even people who got cheap mortgages in 2020 and 2021, they were supposed to pass stress test anyway. They were supposed to prove they can get a mortgage if interest rate will be 5.25. So here we have a question mark, and I want to check if we have any question. Is it better to have bank or store credit cards for better score? So for better credit score, it's better to have a credit card from one of the big banks. So what consider big banks? RBC, Scotia, TD, CIBC, HSBC, National Bank. Any big bank that you can see these buildings of these banks in every city, every town. I really hope I said names of everyone. BMO, oh, I forgot to mention. All these big banks, they have their own credit cards, and it's better to have one credit card from them. A second credit card can be from the store. So store credit card is good to have, but only as a second card. Every person in Canada should have at least one card from one of the big banks, and you will decide from which big bank you would like to have. Okay, I don't see any questions here, so we can move forward. Closing costs. We spoke about down payment a lot. Almost every day I meet someone who was not aware about closing costs. A lot of people remember, oh, I need 5%. I need at least 5% and I can buy a house. But a lot forgot about 1.5 or 1.5%. So when you buy a house, you have expenses. And every bank in Canada, every bank account required that you will have a minimum 1.5% in one of your accounts spare for any expenses such as lawyer fees, appraisals, GST, PST, land transfer tax, adjustments, property tax, and any other fees that your lawyer, your bank may require. So make sure that you have at least 1.5. So it means, like, if you're going to buy a house and you have just 5%, make sure that you have 6.5. So actually it's 6.5 you should have on your account before you go to buy something. Maybe questions? Okay, I don't see any questions, so it's great. We can continue. Oh, I see question. How this mortgage test should be done? Oh, it's a nice question. So, you don't need to do this test anywhere. Your mortgage broker will do it a test for you, and we will calculate exactly what you're allowed to do and or what you are not allowed to do. It means basically what you can buy or what you cannot buy. Your stress test based on your income. Maybe I will go back to the page. Yeah, here is about stress test. So, for example, you called me and you asked, I would like to buy a house. I'm checking interest rates that fit to you. Like not every interest rate fit to every client. Let's say that I found that your interest rate will be 4.9. So what I am doing, I am adding 2 to 4.9. So 4.9 plus 2 is 6.9. And I have a mortgage calculators, special mortgage calculator for mortgage broker. I put this number there and I am checking that what you borrowing is not crossing 39% from your gross income. If your business, if you have a business, I'm checking that your net income for business not crossing 39%. But if you're just a regular employee working somewhere, I am checking that your gross income no more than 39% in case if you are buying with 6.9 interest rate. Again, you don't need to do these calculations. This calculation will do a mortgage broker for you. Or if you go to the bank, this calculation should do mortgage specialist. Now, as a way how to do this stress test, sometimes I am saying, you can do stress test by yourself. For example, what is your income? My income $40,000 in the year. Okay, if you make $40,000 in the year, multiply this by 4. 40 times 4, 160. So this is approximate what you should look to buy. What do I mean by this? This will be your purchase price. Again, it's very rough calculation. It's not exact amount. It's nothing that proved, but it's approximately match complicated formulas of stress test. Okay, I hope I answer to this question, and I will move forward. Just will double check that I don't have any other questions here. Okay, I don't see any other questions, so I will go forward. This program very popular. It's called First Time Home Buyer Initiative. So how we are using this program? Let's say I have 5% down payment, but it can be any reason. It's not enough to buy some house, and I need another 5%. Okay, so I have 5 and I want another 5. I can get this through the government, through the program that's called First Time Home Buyer Initiative. If I buy a new house, I can get even 10% from the government. So I have 5 and government give me a 10. I have in total 15% and I can go and buy nice new house. Of course, I need to give this money back. How do I give this money back? If I sell this house, I need to return to the government 5% if I borrowed 5%, or 10% back if I borrow 10%. If I'm not selling after 25 years, I need to return this money. Here is some example. For example, I have a house $200,000. I borrowed 5%, it's $10,000. House increase in the price after 20 years. Now the house costs $300,000. So 5% from 300,000 is $15,000. So I borrowed from government 10%. I'm returning 15%. Let's say I purchased a house for $200,000 and house lost a price, unfortunately for me, and also unfortunately for the government program. So now instead to return to the government $10,000, I'm returning just 5. So it's very fair program. They're not overcharging you. They just charge you exactly the same percent that you borrowed from them. Standard requirements is usually your total income in your home shouldn't be more than $120,000. And you see, number 4, you are not borrowing more than 4 times. So exactly when we spoke about stress test, I say, take your income, let's say your income $50,000, multiply by 4, $200,000. So if you are going to buy something for $200,000, you probably can afford it. You are going to buy it, and even you can use this program, FTHBI. Okay. So requirements for this program very simple. Like if your income is low, you will qualify. Okay. You're Canadian citizen, or you're permanent resident, or you even on work permit, you're even not a resident, you can use this program. If you live in the area close to Toronto or Vancouver, you can even, your income can be even more, $150,000, and you can buy even not multiplying by 4, multiplying by 4.5. But it's very special areas. And if you live in that area, just give me a call and I will help you. So now we have a question mark here, and I would like to check, okay, what does 5 or 10% depends on? Okay. So if you are asking about this program, I will go back. If you ask about borrow 5 or 10%, so meaning of this, like the, yeah. So if I'm buying used property, okay, somebody lived before you, you will get maximum 5%. But if you buy completely brand new property, no one, it's just construction, just finished, fresh new property, government can give you 10%. Again, if I understand question correctly, I'm going to check how and who calculate value of the house for return for FTBHI. Oh, it's very simple. Like people, it's professionals. We are calling them appraiser. Every city, every town has people. Their job is appraising properties. What do I mean by appraising? They are professionals. They know a lot. They're like realtors, like bank workers. They're doing very intensive exams, and they become their job to be appraiser. So at any point of time, you can say, oh, I want to return my 5%. Let's say you brought, let's say today is January 25th, okay? You started to buy a house, and let's say you got possession on March 15, okay? You got purchased a house on March 15, 2024. And government provided you 5%, and let's say this 5%, it was $10,000, okay? So you got $10,000 from the $200,000. You live in your house 1 year, 2 years, 3 years, and you decided, I have enough money. I want to return government this money. You don't have to wait 25 years. You don't have to sell property. You can just contact this program and say, oh, I borrowed 5%. I want to return. So they say, no problem. We will send a appraiser. So it will come professional, and this professional based on what is going on market, like your house in certain area, in certain town, in certain street, it will compare your house market price compared to the other houses in the market. If price increased, you will need to return more, but there's still 5%. If price of your home decrease, you will pay back less. So very simple. Okay, I believe I can move forward. I don't see any other questions. HBP, very interesting plan. It's not really easy to get this program. Again, it's just for first-time home buyers, but it's possible. When you work in Canada, you pay taxes. When you pay taxes, you will be eligible for RRSP. It's retirement saving plan. It's registered retirement saving plan. So what you can do, you can contribute your money into pension program, or even your employer can contribute money for you. For example, a lot of jobs in Canada, your employer pay your salary, and in addition, they may put some money in RRSP. So when it comes time to buy property, you can pull out money from your retirement plan. You will not pay any taxes, and you can use it as a down payment. A maximum amount that you can pull out from retirement, $35,000. But it's not that you can pull out money from air. It's just if you contribute it, you can pull out it from this account. Very important, money should be in this account at least 90 days. Again, 3 months is the same 3 months as that we talked before. Another interesting thing, sometimes people want to buy something very specific and they cannot afford it. So sometimes mortgage broker using this type of plan kind of differently. How we use it? We can take a loan, RRSP loan, from the bank. This loan can be put in RRSP account. We can wait 90 days and we can pull out this money and use as down payment. Is it a legal way to do it? Yes. Is it simple way to do it? No, not at all. It's kind of complicated process. I will say not too many of my clients using this, but it's possible. So again, how it works? you basically borrowing some money. You put this money into pension plan if you're eligible, if you pay taxes in Canada, and you can, after 3 months, you can take this money back. Okay, again, RSP program is very interesting program. I strongly recommend to consult with maybe financial advisor. It can be financial advisor in your bank. It can be independent financial advisor that works for any institution. Like, it doesn't have to be bank. Okay, I am, as a mortgage broker, can provide just basic information how to use this RSP, but it's actually much more than I'm just talking about, because in RSP you actually can invest. Inside of RSP you can put money in stocks, so you can actually make a lot of money, or you can even lose money there. So it's not, yeah, so if you just put money as a cash, they will return as a cash. If you put them on some kind of short time saving, it will earn some interest, but you can actually put them and invest them inside, and you can make a good money or you can lose. So it's not like standard account. It's not like checking or saving account. It's investment account. Okay, we have a question mark here, so I'm going to check questions. Okay, it's very interesting question. Can we get 5% only if we have 5%, or maybe we have 15% and we will get 5% from the government or from the state? Okay, so how it works? Yes, you can get, even if you have 15%, you can get 5%. But people sometimes think, oh, I have 15%, I will get 5% from the government, 15 plus 5 equals 20. I don't need to pay insurance. Wow. No, it's not so simple. This is a government program. So even if you have 20% down payment, this is exactly a case when you will pay for insurance anyway. Why? Because you have only 15%. Government give you 5%, but it's government who giving you 5%. Yes, you will have 20%, but you will also buy insurance. So for example, you buy home that cost, just an, I will take, like, we'll took simple numbers, like 500, okay? I'm going to buy a house that costs $500,000. 20% is $100,000. So I have 15%, government gave me 5%, I have 20%, so I'm expecting that my mortgage will be only 400,000. No, my mortgage will be higher because I will need to pay for insurance. Okay, so if you have 15% down payment and you want to add 5% and you think it will help you avoid to pay for insurance, no, you cannot avoid to pay for insurance. You will pay for insurance anyway, because how much you have? Just 15%. Even if you have 19%, you will pay for insurance. Okay, I hope I answered this question. And I don't see any other questions here. I can continue. First-time home buyers tax credit. Many people don't know about it and just losing money. So, if you're first-time home buyer and you hear and you listen to me in 2024 because you want to become first-time home buyer this year, so in this 2024 you purchase a home, keep all your receipts, keep all your documents, and in 2025, when you will do your taxes and you will speak to your accountant or you will do it by yourself, please don't forget that you can claim up to 10,000, 15% from 10,000 is $1,500. So government can give you back cash from your taxes $1,500 because you purchase a home. So government trying to help. As you can hear, different programs exist, and this is another help that you can get. So basically, you got possession in 2024, you claim your tax in 2025, and you get some money cash in 2025 because you first-time home buyer who purchased a home in 2024. Now, if you're not really making too much, your income is relatively low, you will get less than 1,500. Okay, this is another program, but before I start this one, I want to stop here and check if maybe I have more question. Is it worth to have 20% for down payment, or it's not a big benefit to avoid mortgage insurance? It's not benefit too much. Like I will say, let's say today, January 25, I'm first-time home buyer and I want to buy home. And let's say I have 15% down payment. Okay? And I want to go and buy home. And I can buy home now because I have 15%. Or I can wait until I have 20. And it may take me several months. And who said that homes that I like will stay in the market? And who say that prices will be the same when I will have 20%? Nobody. So basically what I'm trying to say, if I can buy now, I will do my best to buy now. Because here in Canada, a market unpredictable. No one was able to predict that interest rate will go so high. Last year, a lot of banks predicted that interest rate go down. Yes, they went down for several months and they returned back to be high. So no one don't know what is going on. What we know for sure, if interest rates will go down, prices will go up. So if I have 15% down payment and I will wait until I will have 20, and I will wait 3-4 months, so maybe I need another year to wait until I will have 20. So maybe it's not good. Again, it's just general advice, but if you want to have like appointment, even via the phone, and we can look exactly in your numbers, I can provide a better advice. This is just general advice. So in general, it's not worth to avoid insurance. More than this, sometimes people who have even 22% buying mortgage insurance because of other circumstances, such as bad documents, not stable credit, ability not provide proof of down payment. Like I am working with many people who comes to Canada from many different countries. Sometimes I have clients that come from Peru or from Mexico. Sometimes I have people who comes from Europe, such countries like Ukraine, as just an example. And sometimes it's hard because it's a war right now there. It's hard to provide proof about your source of income, especially if you sold your apartment and this town is not exist even now as a part of Ukraine because now is Russian forces there. So it's very like sad and tragical stories that I am hearing like on everyday base, but Bank of Canada wants to prove, and I don't have proof from where this money come because banks destroyed some information lost, some documents lost. It's not easy. So sometimes you need to buy insurance because this insurance you're buying for the bank. You want the bank will be quiet and like feel confident. So if something happen, they have insurance. This insurance not insuring you. This insurance insuring the bank to make your mortgage, first of all, more affordable and cheap. Even insurer has the name. It's called New to Canada, or it's called Maple Leaf. All these beautiful names of this insurance were created especially for these cases when it's difficult to provide some proof or provide some creditworthiness or any other issues that families may have. So they buy an insurance even if they have 20%. So in general answer on this question, it's not worth to wait until you will have 20%. But if you know that you will have 20% in 2 days, maybe why not? Okay, let's go forward. FHSA. Since it's almost a year I'm talking about FHSA. When it was first announced, it was mess. A lot of people were talking different, you're eligible, you're not eligible. Work permit, not work permit. It was a mess. Even people were going to the banks and their banks say, oh, we don't have FHSA. And sometimes people were going to the bank, oh, we have, but we are not giving this to permanent residents. Oh, we are not giving this for work permit. Oh, we actually giving, but not now, maybe in a month. It was a mess. This is program, brand new program. It just started in April 2023, and many banks just in November or December started to provide this program. So what is the program about? Anyone in Canada can put $8,000 per year next 5 years into this special FHSA account. This is not just saving account. This is investment account. So you can put $8,000 under some program, for example, inside of the JIC government paper that has maybe 5% interest. So your $8,000 will increase 5% yearly. So this is very nice program. You can put money whenever you want, and you can pull out them whenever you need to buy a house. So what is the limit of this program? No more than 8,000 per person per year. No more than 5 years in a row you can use it. Okay? Why it's good to put money there? Because you can get money back. Because this program works similar to RRSP. So it's basically similar to retirement plan. So you put 8,000 inside, and let's say you have a good income. When it comes to tax return, you will get money back. So today is January 25, tomorrow January 26. Tomorrow is Friday, January 26, 2024, and you want to go to the bank. You have $8,000, you go to the bank, and you put $8,000 into FHSA. January 26, 2024, you put $8,000 in this account. And you go shopping for the house. You purchase house at some point. And it doesn't matter when you will purchase house. This year, next year, 3 years from now, or even 15 years from now. You have 15 years to buy a house from the moment that you open this account. And you pull out money and you use it for down payment, for closing costs, for whatever you need to buy a house. What happened in 2025? In 2025, when you're doing taxes, you provide proof that you put 8,000 into your FHSA account and you get money back. Not all 8,000, you get 13% based on your income. approximately if you're making around 60,000, you will get $2,000 back. Again, every province have different taxes, income taxes. So I'm not promising that you will get $2,000 back, but you definitely will get some tax money back. And it's free money. You put 8, you pull out 10. Beautiful. Okay? And I'm not speaking about that inside it can go up in interest. So it's very good program. I believe today, like if you compare between all the programs, if it's not the best, so it's at least second. So any questions that maybe we have here? How long should the money be in the FHSA? 1 day is enough. So this is exactly a beautiful part of this program. Like I have money in my checking account, okay? Bank asks history of 90 days. I provided history of 90 days of my checking account. So let's say today is February 25, okay? I provided, February. Today is January 25. I provided history of my account. So it's almost end of the month. I provided history November, December, January. I provided that this is my $8,000. I made them from income, or this is my saving from long time ago. So $8,000 is my money. It's not like cash that I put from somewhere from my pocket. This is my money that were on this account long time ago, or from my income I have $8,000. I providing this proof to the bank. I'm taking this $8,000 and put transfer from my checking account to FHSA account. Or if it's in my saving, I can transfer from saving account to FHSA account. It's basically transfer from saving to saving. But the difference that FHSA saving have privileges. What privileges? As I said, tax privileges in the next year. So, and let's say I went out, February 1st I found a house. I can immediately pull out this money and use to buy a house. It's cashable account. You can cash money immediately, but you need to be careful. When you put money on this account, you need to make sure to say the person who doing this for you, or when you're doing this by yourself online, because you can do it online, you don't close it for that 3, 5, 7 years, or even for 1 year. Just put it in any investment, cashable investment that can be taken back, or just put it as a cash. Like you have cash on your saving, put it as a cash into FHSA, and you will be able to pull it back at any moment. Let's check questions. No questions. Amazing. So everything clear. We can move forward. Just 1 or 2 minutes about B lenders and C lenders or private lenders. So if you go on the street and you see bank, it's usually a bank or a lender. If you work with mortgage broker usually use a bank, a lender. But mortgage brokers can get access to B banks or C banks. These banks have different requirements. For example, you need at least 20% down payment. These banks not regulated by federal government. So why it's good? It's good that you maybe can borrow more from these banks than usual. If you remember, we spoke about times 4. Let's say my income 50,000 times 4, I can buy something for 200. I don't want to buy for 200. I want to buy for 250. If I have 20% down payment, I can buy something for 250. I can use one of these B banks. Are they banks more expensive? Yes. For example, if you go to any bank in Canada, probably interest rate right now 5.4, 5.1, 4.9, around 5%. Let's say 5. Okay. If you go to the B bank, your interest rate will be 6 at least, 6.1, 6.5, 6.6. So these banks more expensive. C banks even more expensive. So when you going and using these banks, make sure that you understand that you will pay much higher interest and your payments will be much more higher. But this banks flexible. For example, you can put there and pay not 25 years, you can stretch your amortization for 35 years. Your credit score can be 550. You may not even have a credit score. So you may have a problem with the credit score. So sometimes these banks is good to use in certain cases. Before I'm talking about rates, I want to check questions. Okay. One of the questions right now, from what steps should I start mortgage? So mortgage process. Mortgage process can be easy and can be very complicated. My recommendation, start as soon as you think that you maybe even buy a home. Not when you start shopping. You just, like, for example, woke up and you, oh, I maybe want to buy house 2024. You should give a call to the mortgage broker and start your process right away. And how's process start? Very simple. It starts from mortgage application. You will provide all information about who are you, where you live, what are you doing, what your jobs, what you did before, what jobs you had before. Everything matter. From what, if you come from outside of Canada, from what country you come, when you come, how much money you brought to the Canada. Did you declare this money? Do you have a copy of declaration? You don't have a copy of declaration. Okay, so many questions, so many things that I cannot answer through this YouTube channel, not because I don't know these answers, I just don't know your personal circumstances. So what I'm trying to say, as soon as you know that you need to start process, you should start process. How, if you want to start process with me, it's very easy. Under this video, you should see a link. You can click on this link and you can contact me or via my phone number or WhatsApp or whatever, or through the email address. Okay, so if you want to contact me via phone number, my phone number 204-998-8349. I hope I answered this question. So step by step, the best way to start step by step, to work with somebody. By the way, I forgot to mention, services of majority mortgage brokers in Canada are free. You are not paying them. And it's very convenient because you can do it from your phone, you can do from home, you can do it even at 7 p.m. Some mortgage brokers work on weekend. If you want to work with me, I work every day from 9 to 9, from 9 a.m. until 9 p.m. You can give me a call and we can start a process, even on weekend. I hope I answered this question. So step by step, yes, this is process working step by step. And first step, contact mortgage provider. What's the cost of your services and support with purchases the house? And do you have a license if it's required? Yes, Canadian government required every mortgage professional have a license. Attention, mortgage specialists in banks are not required to have license. I am a mortgage professional, I have a license, and yes, every mortgage professional who provides services must have a license. This is the first. What's the cost? No cost. I will repeat myself. Mortgage brokers in Canada usually not asking for any payments. I am personally never charge my clients. Why? Because mortgage brokers in Canada paid by banks anyway. So it doesn't make sense to pay mortgage broker if banks pay him anyway. Okay, so please, no charge, services for free, 100% support, step by step, every step, like what information to provide, what documents to provide, in what order provide documents, what to do, what not to do, what is good, what is not really good, 10%, 20%, borrow FTHBI, not to borrow. Yeah, so please don't hesitate to ask and contact. Let's move forward, okay? So rates. Mortgage rates can be 4.9, and as I just mentioned, can be even 7%. So what factors that influence mortgage rates? Time. If you start early, your mortgage rate will be better. If you have fixed rate, right now fixed rate, they are lower than variable rate. Credit score. The lower credit score, usually interest rates that you will pay will be higher. Employment type and income. Different employers may influence what interest rate eventually you can get. For example, if you're a nurse, you can participate in nurse program and your interest rate can be lower. If you're a teacher, also. If you are specialist, like for example, you work for some electric company, you can get special rates for electricians. If you're contractor or constructor, and again, the list very long. Different banks specialize with different professions, so employment type and income influence your rate. Loan size. If you take bigger loan or smaller loan, the bigger mortgage, usually interest rate can be a little bit lower, you can get a discount. Home value, appraisal. If your home value have higher price or lower price. Loan to value. Loan to value is basically, let's say your home cost $500, not $500,000, and your loan $400,000. So your loan to value is 80%. So if your loan to value 80%, your interest rate will be, for example, 5.4. But if your loan to value will be, let's say 90%, your interest rate can be, let's say 4.9. It's just an example, but you should understand everything matters when it comes to interest rate. Debt. If you have debt 32%, 40%, 39%, 44%, the lower debt, the better interest rate. Length. If you take mortgage for 1 year, for 3 years, for 5 years, for 10 years, makes sense, the interest rate will be different. If you take mortgage just for 5 years or 25 years or for 35 years, different length, different interest rate. If you buy home for yourself or you want to buy it for rental, completely different interest rates. Home location, of course, if it's in British Columbia and if it's Quebec, interest rate in Quebec and interest rate in British Columbia is not exactly the same. They are different. Is it huge difference? Not. It's usually small difference, but they exist. Loan type. Some mortgages have special options. I'm not going to speak about all these options because I don't even know if you need all these options. So this also can influence your interest rate. And the last one that you see in red, availability to buy down the interest rate. This is a very interesting part. When you work with mortgage specialists from the bank, mortgage specialists can provide only rates that have this specific bank. For example, if you go to RBC, your mortgage specialist in RBC will provide you rates that RBC can provide. If you go to TD, you speak to mortgage specialist from TD. Mortgage specialist from TD can provide just rates that has TD. But if you work with mortgage professional who can shop around between Scotia, TD, and maybe monoline banks, or we call them, how we call them monoline banks, or more simple name, online banks. They can have much better rates, not advertised rates, promotional rates. And mortgage broker actually can have influence on this rate by buying them down. For example, you qualify for 5.0%, but mortgage broker can speak to the bank and can use some of his income, future income, and get you 4.95. If you work with me, you work with discounted broker who always doing the best to get their clients the lowest possible rates. I'm always looking for the option to buy down the rate. Always, if you're working with any broker or specialist, always ask, can you buy it a little bit lower rate for me? If they cannot buy, it's probably not a good choice. Okay, so this is very interesting point. So not every broker, not every mortgage professional have this option. I am always have access to this option and doing my best to get the lowest possible rates for my clients. I want to check questions. Okay, the last question was about the cost. I already said that I am not charging. So I go next to next. And we almost at the end of my presentation. So please think, if you have any questions, it's exactly a time to type all your questions because we almost at the end. So what I would like to say at the end, I would like to talk about things to avoid during the process. So during the process, please don't take any loans. Don't take any money out from the banks. Don't borrow any money if you can. If you need to borrow money, talk to your mortgage professional and ask if it's worth it, or maybe to buy a house first and maybe borrow money after. Don't carry hard debts on your credit cards. As I mentioned at the beginning of the presentation, if you have a credit card with limit $2,000, no more than 30%, no more than $600 debt during the month, and pay out the card as soon as possible. Avoid use the cash. You arrive to Canada, you cross the border, put all your cash in your bank account and forget about using the cash. The less cash you're using, the higher chance to get a mortgage. Falling behind of bills. Make sure you pay all your bills on time. Make sure that your checking account always positive. You always have spare cash on your checking account and savings account. Don't maximize your credit cards. Again, reminder, I forgot how many times I'm saying this, but some people believe that it's maybe not true. It's very, very important. No more than 30% from the credit card balance. And the last thing, if you are going to buy a house in next month, please don't switch a job. Make sure that you stay at the same job at least 3 months and you have permanent positions there. All casual contract position doesn't count. Okay, so make sure that you check in all this. So before I finish, I would like just double check that we have any questions here. I don't have any questions, so I will just type thank you. So I typed thank you, and I type my heart. I send the hearts here. Thank you very much for everyone who participated in this presentation. I can see thank you from you guys. You are welcome. I really hope this information will be very useful. Please, please, please share this information with as many friends that you have, with anyone who is thinking even, who maybe even don't want to buy this year, maybe one wants to buy in a year from now, share this information. It will be very useful. As early as possible to start to prepare, they will be eventually ready to purchase. So have a wonderful evening and have a wonderful weekend.